When do you expect the unemployment rate will fall below that 4% mark?
But we have in mind that the unemployment rate is going to track broadly sideways from here. We haven't really got it falling dramatically over the next few months. We think that one of the factors that's going to come into play is you're going to start to see workers coming onshore now that the border's reopened. And we think that inflow of workers is going to start to meet some of the demand. And that will mean that the unemployment rate doesn't track sharply lower. And that's a little different to the consensus. But that's our view. We think the labour market actually, the tightening in the labour market, or the pace of that tightening, is going to slow down a bit over the coming quarters.
So where would the unemployment rate be sitting by the end of this year then?
We have it sitting around about 4%. We think that we won't be far away from that sort of mark in terms of the overall picture.
Coalition at the moment are pledging to create 1.3 million jobs over the next 5 years. Looking at the ABS's stats today, there's about 550,000 people unemployed in Australia at the moment. So with the tight labour market, where would all of these workers come from?
Well, that's a key question. Look, I think that the main answer to that for us is that we're going to bring a lot of workers from offshore. We're a very attractive labour market at the moment. If you think about where we stand, as we say, the unemployment rate is very low. Job vacancies are at all-time highs at the moment. We have a high minimum wage, one of the highest in the developed world. We have a strong economy and good health conditions. And we've just, over the last few months, reopened the border. Late last year to skilled migrants and students, and more recently in late February to international tourists, which includes the backpackers, of course, which take up some of the roles in the labour market. So we think the really big force at work that's going to boost labour supply is going to be that reopening international border.
The other big question is wages growth. The most recent figures were 2.3% annual growth in the year. When do you expect wages growth to really start picking up this year and maybe get closer to that 3% level?
Well, again, we've got in mind that the wages growth are starting to trend higher, and we think they will gradually climb over the next couple of quarters. We think we won't get to 3%, though, on the wage price index until early next year. So we think it's going to be quite a gradual process. It's going to take time. The labour market's tight, but we know that a lot of the wages are set in longer-term agreements, and it takes time for those longer-term agreements to roll over. So with that in mind, if wages growth doesn't pick up to 3% until early next year, we think, although the RBA probably will have to lift interest rates in the second half, they'll probably be able to be quite gradual about that process. We don't think they're going to be lifting rates really significantly or aggressively through this year.
Australia's inflation numbers for the March quarter, they're going to be released in about 2 weeks. Where do you see inflation going, and is inflation transitory or here to stay?
Well, we think inflation is going to pick up, and we're going to be running it closer to, we think, 4.3 on the next print, which is a step up from the 3.5 on the last print. The underlying measures, which the RBA focuses on, we think will rise to be a bit above the Reserve Bank's target band, just above 3% in the first quarter. And the question, of course, is some of it going to prove to be transitory? Well, some of it is likely to be transitory. The sharp rise we've seen in oil prices that's fed through to petrol prices, we think some of that will start to work its way out over the coming quarters. And, of course, there are some disruptive impacts from the pandemic as well, that although they've stuck around for a bit longer than expected, they probably will prove to be transitory. So not all of that pickup in inflation is going to stay. We think inflation will start to ease into the second half and running into 2023.
What are the implications now for the Reserve Bank of Australia with that rising inflation and the tight labour market? What are the chances of a rate hike next month?
Well, I think the RBA is unlikely to lift its policy rate in May. They've given some fairly clear guidance to us that they want to see both price indicators and wage indicators before they're prepared to start lifting their cash rate. And it's also possible the election's playing a role in all of this in terms of their timing. But we get the CPI at the end of this month, and we think the RBA is going to want to wait to see the wage price index, which we get in May. And so that opens up the door, I think, to them considering lifting interest rates after the election. And that's about where we think it'll happen, sometime in the months that follow the election.
And Paul, really quickly, where do you see the cash rate at the end of this year?
Well, we have in mind the RBA won't actually get going that much. We think the cash rate will still be only at 50 basis points by the end of this year. And a lot of that really stems from, as I've described, our expectation that actually the unemployment rate doesn't go down a whole lot more from here, that wages growth takes a while to get going, and that the RBA really wants to see wages growth running at that sort of 3% rate before it's really going to want to start to move. So we think that the RBA, although they will feel that they have to lift the cash rate a bit, probably won't deliver a significant amount of hikes this year.
Well, Paul Bloxham, HSBC Chief Economist, Australia and New Zealand, thanks for your time.
Thank you.